Hi, good
Afternoon.
afternoon.
I was going to say good
Only
morning for you.
afternoon.
Normally, we're used to saying that.
It can be good morning, it can be good afternoon. It's the two of us in
It's the
one
two of us.
room.
Doesn't happen often. We're
It
a bit
doesn't.
lost without our good old analyst.
Our good old analyst, and but it's a really good reason that he's not here today.
Yeah. Yeah.
Jasper became a father for the first time
Monday
Monday.
or Sunday. Yeah.
Yeah, everything went really well. Is Bo?
Bo, exactly.
So we're
And he sends his regard, of course, to all the listeners. I'm sure it was his first thing on his mind today, knowing that he couldn't make it.
yeah, and I'm quite impressed that he named his child after a dairy commodity. Good to have you all join us today. I'm back in Amsterdam together with Seb. We'll run you through a fundamental view on dairy markets today. And I see the first question has already come in. Congratulations, Jasper.
Yeah, I'll keep the chats. I'll keep the chats.
Perfect.
So yeah, guys, we'll do our best, of course, today. The two of us. We've done some prep. We have got some cool. We'll of course use Vesper to go through the markets. And yeah, I think we got some cool insights.
Yeah, and some big shoes to fill, of course.
Big shoes to fill.
What I want to start off with today, Seb, is I did a thing. I made and what you can see on the screen is these two diverging lines. I've made two dairy commodity baskets.
Yeah.
And I made one basket equally weighted across S&P, whole milk powder, butter, and cheddar.
Normal commodities.
The commodities within dairy. And in the second one, I added two more products at WPC80 and MPC85.
Yeah.
All equally weighted, same. So
what are you trying to show with that with that graph?
I have a feeling that more than ever we're looking at two different markets.
I think so too. Yeah, it's quite clear as well. I think with what we're going to talk about today, we are in two completely different sentiments, complete different markets that move. They used to move in parallel, but now they move in completely different directions.
Yeah. And I think that's the.
I think what you're highlighting there with this graph is exactly the directions that they're both in as well. So I think it's a really cool graph. I didn't know you could do. How did you make that?
Yeah, so if you go to cost models, and people always think cost models are there to make a croissant and to make your model there, which they're also there for. But you can also make a basket. So if you go to cost models, I will show you quickly, and you just decide. Well, you can create a new one, and there you decide to select a basket of. And you select maybe S&P in here, and then you just select the VPI, and then you add a product, and you would say butter. And if you want to say you make a S&P and butter basket for whatever reason,
you can choose a share that you're making it with.
Yeah.
Oh yeah, that's cool.
So you just choose a share, 50-50 in this case. Oh, sorry. And then you save that, and you get that as a benchmark. I know a lot of our users also do this to make, for instance, like a cheese basket. So they want to compare like the VPI cheddar together with the EX index cheddar, and together they make a basket where they can track both of them. So that's what I've done here.
Yeah.
The market is totally diverging. And where in the past few weeks, we've very much focused on the red line. And of course, we will keep focusing on the red line.
It is on everybody's mind, right? It is in uncharted territory. So I suppose this is why we've also kept it in the forefront of all our discussions. But I think it's very important not to forget the gold commodities, right? I think that's where most of the volumes go through as well, especially being with all the ways, the capacity being limited, and especially here being in the peak season with a lot of milk coming through. It's so important to understand what is going on with your normal standard commodities. I think that's what we've got on the menu today.
Yeah. So, and to do that, it's a fundamental view. So I think the first thing to look at that is very interesting is what is happening. This is a graph we always go through, also with Jasper, is just comparing the traded milk price you see in green with the current Dutch farm gate milk price. So what are the farmers being paid versus what can you get on the open market for your milk?
What is very clear here is just the difference we've had. The spread is just extremely big. And what does that mean?
I think if the spread, well, we always see seasonally, if there's a lot of milk available, it will go to the market cheaper. So this time of year, you would expect a larger spread. But the size of the spread that we've seen, I think, is quite unheard of. We haven't seen it as long as we track it. It's way higher than it's been before. And usually it leads
to two things.
That
is one, either the farm gate milk price is going to decrease, and it has to, because they're losing too much money otherwise on the open market. Or the opposite, where you're going to see is the milk supply is going to tighten up a bit, and thus that milk price paying on the open market opening up. So those lines often come back towards each other. But in this case, it means that there's just an oversupply. There's just a lot of milk available.
Yeah, and I think it's a very difficult situation. What's different than in the past, because these two markets are diverging, it's very difficult because in the past you would say, and of course I think commodity is still the key thing you look at. You're not going to look at protein to decide your milk price, or not as much. But it's very difficult where in the past you would say, okay, the entire market's crashing. We can't get our money's worth. We can't valorize it. So it doesn't make sense. That here you need to take into account two totally different markets.
Yeah.
Making it, I think, for producers a way harder question to answer.
It's much harder. And especially if producers don't have the capability of doing, both products. It's very hard to just keep an eye on both things because they're both having an impact today on the milk price, of course.
Yeah, and if we do look at the recent tightening of the green line, we see a very strong upward movement, leading to believe that there is less milk available than there was, or less of an oversupply of milk than there was a few weeks ago.
Completely.
And then if we look at dairy production, and here the tip is to look at, I think for Europeans, at either Germany or France.
Exactly.
As they have weekly numbers that are updated, to the week of the 8th of June. So these are a week behind the Germans, 1 week earlier. But you do see a totally different story.
Exactly. And I think there's actually a question that's right about that as well. French production decreased. What is the impact? And I think that's a very fair point, right? It's one of the first countries or major countries within Europe that we're seeing a switch. That's a switch that we've said since a while as well, that this switch is going to happen. We've seen last year around July, August, extremely high numbers. It's going to be very hard to keep up with. France was the first one to lag a bit behind. Now, it is important to say we're still year to date extremely high. So what is the impact on the short term? I think very minimal, to be honest. We're still in a very oversupply. We're going to go through the rest after. I think stocks that are unheard of. So this is still so we're seeing still a lot of milk coming through, and I mean just look at the German ones, and that is the same. Germany is high, the Netherlands is extremely high. Ireland has had a good one as well. We're seeing as well with the weather. We had really tremendous weather, and then we've had rain. That's great for the cows. Cows are outside. Great temperature for the cows. We expect still a lot of milk coming through in June.
Yeah. And I think going back to where the milk price is used for, so we look at the milk price already a bit, but it is, of course, used to incentivize and de-incentivize the farmer to produce according to the amount that the market can actually take in.
And what's his exact? Oh, that's the one that we're looking at. Yeah,
exactly. And I think this is one of the most interesting things to look at. That's the milk price to feed price spread. Feed being the
costs.
Largest and most volatile cost element for the dairy farmer in Europe. And if we look at what's happening here, and this margin tells you a lot about the farm gate economics. How much can a farmer produce? If we add a spread to this, I think I
love that spread.
It's easier to see with, especially when it's coming out. And I think we need to flip the spread slightly. We see there's of course a spread, but if we look back at the past 5 years, it's not often that it gets this low, or it hasn't been this low for quite a few years. I think in 2023 we had a small stint, and then of course looking back it was even smaller, the spread. But we have really come off of levels that we saw last year.
Yeah, and I mean the levels that we saw last year was the reason why we've started to have as well that big milk surplus that was a bit as well unexpected. Expected for some, unexpected for the others. And that is, of course, has decreased with especially the milk price and the farm gate milk price decreasing heavily compared to where it was last year. So we're seeing a bit more as well, let's say maybe more usual levels, a bit below now. We're not at the lowest point that we've seen, but that is an extremely important graph to keep an eye out on. Because as you can see, we went down, we still went up a bit, which means that, and the numbers, so in France probably had a bigger impact of maybe a bit less milk coming through. Germany, it's still probably a very good margin for them to keep on milking. So that's why one of both has to either change, right? Well, probably the milk price has to come down a bit more.
Yeah, and I think I think it's clear that this, of course, has a cyclical nature. That's what we know. It's always milk production always overshoots or undershoots, and then it compensates by the farm being produced, and it never lands at the exact same level. It's a cyclical nature. But what we do see here, I think we're at the low of this spread. It might go a bit lower when the milk price corrects down a little bit, but we are already at quite a low point. So we know that in the current economics, if you as a farmer have a totally empty feed silo, you know that there's not you're not earning a great deal of money on this milk compared to how it was
last year.
Yeah. So that means you're going to feed less. But I think the key thing here is how many farmers already have an empty silo.
Yeah, and listen, we are for the moment going to the summer, and in the summer we're more outside, they need less feed anyway. So this has a really big impact whenever the cows go more inside. For the moment, I don't think that's going to have that much of a major impact on the milk production. I think the milk production is good. We can keep track of it over the coming weeks, but it's looking still very strong, even with a margin that's a bit lower than we've seen last year.
Yeah, and I think there's always a buffer because we know farmers buy their feed ahead of time. It's not a spot purchase. So in the current spot market with empty silo, it would mean that it might be less of a margin.
Yeah.
But if you bought your feed last year for decent prices, good payout price, you still have quite a bit of feed there.
Yeah, so what you mean is whenever you see this, it has a lag, right? So whenever you see it low, it probably only has an impact a couple months later on the actual milk production.
Yes. I think that's a good one to take into account, that there's a buffer there. We do know that it is cyclically changing because the circumstances are there, but how long it takes, we don't expect it to be there tomorrow, I think.
Yeah, okay. So that's probably goes back to our first point is we do expect the second half of the year, especially with the great numbers that we saw last year, probably to be below of what we saw last year.
Yeah.
Taking this into account as well.
Yeah, taking this into account.
Good point.
So we'll start contracting a bit. I think then if we switch over to pricing, actual product pricing, go to commodities, and starting off with S&P, I think this is S&P versus non-fat. I think this is a terribly interesting chart. Yeah. With, of course, the massive drop of non-fat on the CME coal, which... Do you think it's fair if I say it was bound to happen?
Sorry, I was responding to a chat we've had here. Somebody's asking about the storage for butter, whole milk powder, and S&P, which we're about to talk about. What was your question?
So if you look at this chart with me, Seb, we see the decrease in non-fat, where I still believe that it went this high and that it had such a large spread to S&P is still the more interesting effect than the fact that it's coming back into similar territories.
Yeah, well, is the question about, is it normal that we're seeing the three S&P prices diverging towards each other?
Yeah, I think what do you make from this?
Yeah, well, I think, listen, S&P has been extremely interesting, right? It is an international market. What you usually see is whenever one price goes up compared to the other, there's a switch, right? US being so high, people switch automatically towards more Europe or Oceania. Now, the interesting, though, we've never had this, and at the same time, a global crisis. Well, we've had this, of course, before, but a global crisis like we've seen as well now in Iran. And that's had a shift in terms of exports and imports. And that's why I believe that this US price has stayed actually that uncorrelated compared to what it used to be. Because of the exports still being extremely strong from especially Asia, and I think that's what you want to show there as well. Asia towards, US towards Asia, compared to one of Europe, one of our outlets, especially with a low price that we've seen. The logical step would have been Europe actually goes up and the US goes down because our demand was going to be more, or our supply was going to be more in demand there. That wasn't the case, and that's why we feel. That's why we see actually this price being that far apart for a long time. Now, there's been a lot of purchases. Often when there's a lot of purchases, it after cools down, and that's what we're seeing now. And that's why we see both of, all those prices converge back to where it used to be.
Yeah, I think that's so surprising. And then if we look at exports, what is super interesting that if we compare it to the past 5 years, you'll see that it is down. But if we just compare S&P exports from the US, S&P non-fat together, compared to the year before, they've actually not been so bad.
No. And I think what's very interesting to see is normally our outlets is, I think if you go to the table, you can see some numbers for where it's going. I think what's extremely interesting that you see some really big countries that have, especially in Asia, that are plus. Look, we're seeing, it's actually, maybe you can zoom in a bit. It's hard to see.
Is it hard to see?
But we're seeing plus 30%, plus 20, plus 60. That's extremely high numbers. And that's usually when this happens, you don't see it like that, right? Especially with price being that high, you wouldn't expect them to have bought from the US, you would have expected them to come from Europe, or that product come from Europe. And we saw exactly the opposite from Europe. A lot of those exporting countries for us were actually, we were down on those numbers.
Yeah.
What does that mean? I think coming back to we're showing here the export, but the level of storage for S&P.
Yeah, let me pull that up for you. That is over here.
Extremely high, right? So we've had, as we talked about, we had great production, a lot of milk come through, a lot of S&P being produced, and just not much of an outlet to send it towards. If you combine that plus, of course, the Middle East as well, an outlet that has been lacking over the last couple of months. That's exactly I think if you see the last month, that is the production. If you see how high the production is, compared to here we go. Compared to the exports, we have a big surplus and we have extremely high storage. We're announcing some pretty high storage, and we have there's other sources out there that are even 100,000 tons more than what we're publishing. So there is a lot of product out there, still being kept.
And the stock levels, of course, these are Feb numbers, so these are pretty flush. Numbers still, and of course, because the consumption figures need to come in for us to keep on calculating where stock levels are. But if you just see the mismatch between exports on the one hand and production on the other hand, here there's such a massive gap that we know this is growing explosively from there.
Completely.
Is there a strategic reason for this amount of S&P production?
I don't know. I think it is just it's just usually what happens, right? You are in the peak of the milk season, and that's often whenever you have a surplus. We know that WPC80 they're drawing as much as they can, but they're all full. So you have extra milk coming through. What do you transform it in something that you can keep for a long time, and that is skim milk powder and butter. And interestingly enough, the two things that are quite bearish at the moment are exactly these two products for that reason, because it's just a good outlet and you can keep it. And at some stage, as you can see now, I'm sure that things are starting to move again. Strait of Hormuz hopefully they've found a peace treaty, and hopefully things are going to start moving again, right? And I think that what we were showing just above with that spread being quite high, I think that if this continues and it really does seem like they found an agreement, I think we're going to come really close towards each other extremely quickly, because there's going to be another outlet for Europe to finally get rid of some stocks, because they desperately need to. Because if they don't, we're going to keep on seeing this price decrease week after week.
Yeah. And so the summary is maybe S&P, which we would expect it to have been a commodity. Mm-hmm. So with the big pricing difference would have been the demand shifting from one region to the other, has not fully happened. The US has been able to, even with high pricing levels, has been able to keep demand on their side. If we look at butter, which we would consider, at least compared to S&P, to be less of a commodity, where we always have the age-old that the US butter people don't love. It has a different color, a little bit of a different taste, and it's not there. But if we now compare more or less the same that we just looked at with S&P, but it's a different way around that. It's not the US, it's way more expensive. It's been the US, it's been way cheaper, and now they are coming back together.
Yeah, I think that answered your question there, right? The US is always seen, especially in butter, as a different grade. I'm not saying lower or higher. I'm not here to judge, but less fat percentage in it, different colors. But why did people choose still US butter over the last few months? Just because the price was just so good compared to our butter. But what we're seeing now is the opposite. We're arriving at very cheap butter. We have very high stocks. Once again, I think we'll show that in a bit as well. And we're seeing the price converge next to each other. So it is interesting, and it's very interesting to see. I think that's your next graph, and that's just the export. How has the US been doing?
Let's maybe
on the exports.
Go to the graph first. This is US exports of butter.
Wow, you see, exactly that.
Uncharted territory.
Uncharted territory. Yeah, that's incredible. And I expect those numbers to still be strong, because only March or April has been published. I think that's still high, and I think that there's still, it's a bit the same story as S&P, right? We have had trouble to get product out of Europe, simply, and they've had no issue whatsoever to get their product moving. That's kept their price competitive and their price coming up as well. We saw it with skim, we saw it butter as well. Now the question is, as soon as there's a bit less disturbance, let's say on the shipping side, what the impact will be.
Yeah, and if we look at who is eating this U.S. butter, it's not Canada. They have dropped massively this year. But if we look at the increases there, that South Korea and Saudi Arabia,
that's some big increases. I mean, we're talking about how many tons? 3,000, 4,000, 5,000 tons. I think when you add it all up, it arrives to a big number.
Yeah, and it's a necessary outlet.
They have to, 100%. And I think, listen, price gets product moving, and price being as cheap as they've been over the last couple of months for the US, has basically kept those markets afloat.
Yeah. And then let's also look at the same supply demand chart with the stock levels in there for butter. I think that's
always a great one too.
Well, that's of interest. Do we start off with the US?
Yeah, US is always a good one because they actually do publish their stock levels compared to us.
So let's zoom out a little bit to get some more context on where stock levels are. So if we look at it, the April numbers at 140,000 tons.
Yeah.
And if we just compare that to April numbers before, actually 152 the year before. So we would say 164. Then we see 150 and 135 and massive.
Yeah.
So US, we seem to be seasonally on the lower end of the normal bandwidth.
Yeah. But I think that the reason is, as you just showed, right? They have been strong on the export side, which kept their stock levels relatively okay. Relatively okay. But they've had such good numbers in terms of production as well. That product is available. There's a lot of product available.
Yeah. And then let's only look at stocks for a little bit in Europe. Of course, still looking at these Feb numbers.
Yeah.
Where we expect them to continue to rise. But if you compare that to last year's Feb, there's been massive stock building.
Yeah, 100%. We're in two completely different markets compared to where we were last year. Butter has been extremely, extremely interesting over the last months. What we saw was last year, prices were extremely high. Buyers were very short, right? You have price at 7,000 euros. You're not going to cover. Last year, they didn't cover at the end of the year straight away. It was a massive risk. This year, we saw that buyers saw their opportunity. The year started with butter prices being between 4,000 to 5,000. We've seen below 4,000 a couple times since the start of the year. We are under 4 now. What did buyers do? They have been buying every week for further out. There's a lot of coverage. So if you look at it today, Q3, Q4 are covered. Some producers are saying that some big demand still has to appear for Q3 or Q4. I personally have not seen it yet. I feel actually the opposite. I feel like there is a lot of coverage that has been done. And today we're seeing very small bids for very low volumes, which shows me that I don't believe that there's still a lot of demand out there for Q3. And that's kept exactly these stock levels extremely high. A lot of purchase. So these stocks, there might be some of that stock that's already been sold. That is, of course, possible towards the end of the year because there's been a lot of coverage already. But that's kept the price extremely low. And that's why I do believe that this bearish sentiment will continue. Demand isn't really there. Production has been. We're seeing some high number. I mean, you're showing Feb here, but we'll see the numbers for March and April. But we're going to see this, I think, to probably maybe record levels. So we're now at the butter and skim. I think that's interesting for the VPI. It's weird to do a dairy cafe on a Wednesday and on a Thursday. On a Wednesday, we don't have the VPIs out yet, but we can expect them, especially for butter and skim, to decrease a little bit. And the reason is simply just because there isn't that much demand for the moment, and coverage has been done because prices have been low. And you'd rather, if you're any buyer and you've been used to and you've been there for 2 years, and you saw your butter now costing you 4,000 euros, you'll happily take it. Between 3.5 to 4.5, any buyer will buy, and they'll buy further out. We've seen a lot of purchases being done for the whole of the whole of 2027 already. So it is a it is a very different market that we saw over the last years, and we need a drastic change in order to see a switch in the market.
Yeah, and I think that's also, I see a question in the chat as well. What's the estimation of the 2027 butter coverage? But I think that's also the main question I hear a lot here is, are we still buying a lot of butter and for what period in time?
And when is it switching?
What is happening? What are the buyers, what are the sellers doing? Do you have any insight also from the marketplace there? What is happening, how you see it evolve?
Yeah, I think that's what's interesting with the marketplace, right? You can see especially where buyers are, where the bids, where the deals happening, are most of the deals happening further out. And what is extremely interesting is we've seen over the last month a lot of purchases for further outs, which I think tells me that there's a lot of coverage already being done for 2027. Now, and I think that's what's always so interesting with dairy is as soon as everybody thinks the same thing, the opposite tends to happen. There is, of course, and we've seen over the last year, as soon as there's a bit of a switch in sentiment, there's a bit of this yo-yo effect where everything happens very quickly, and the sentiment just changes extremely quickly. And often what you have with those low prices, a buyer isn't pushed to buy. He often waits. He's like, well, why would I buy this week if I can buy next week? So often that kind of delays the purchasing and you don't really see it. And as soon as there's a bit of switch in sentiment and we're going to see some production numbers decreases compared to last year's, now you'll have maybe some buyers that will come a bit more bullish in the market and be like, shit, I might have to buy a bit more. They'll buy a bit more. And what tends to happen, a lot of buyer it turns a bit into a frenzy. And a lot of buyers step into the market. We saw that a couple of months ago when we went straight away from 3.7 back to 4.7, 1,000 euros within a couple of weeks. Well, this was completely fundamental driven. If you look at the numbers, stock levels are really high. There was just a sentiment in the market. So I think that's, if we look at what are the bullish signs, that is what you have to be careful of, is if the market starts, if we start to see a bit of red numbers, and that's probably going to happen maybe during the summer or after the summer, and that we're going to see some production numbers going down compared to the previous years. A lot of buyers stepping in the market at the same time, and so that's why I say, listen, these are good prices. If you can cover.
Yeah. Let me add our latest WPC80 and GLP-1 white paper into the chat. So if you believe you've missed out on coverage on those products, you can still read a little bit about it. We just published a new paper.
I think it's extremely interesting. And even if we just mostly talked about commodities today, just your normal one, but I think it is still very interesting to look at what's happening there, because that is what is keeping those milk prices well high, is these products.
Yeah. So, and I think the conclusion or the summary of what we discussed today is that there are two totally different markets, which we've shown on the screen, of course. And it's, I think, very important to look at cyclically where we are with milk. That we are, of course, seeing the cool down there, which we see in the margin for the farmer decreasing. But for that to totally come into effect, there's still a lot of buffer that might give a lag on that. And that is when they've bought feed, but also these really high stock levels, which will first need to go to the market for it to change. But I think, Seb, what you said at the end there, once we start seeing red numbers, which we will, soon, we're seeing them in France already, but we will probably see them at a certain point. We won't end the year to date on a bad number.
No,
but the monthly numbers will undershoot. Once that all of that extra milk stops weighing on the market,
that creates a reaction. Yeah,
and keen to see what happens there. Who will hold out the longest? How would it go?
Yeah,
but also some good advice from your end. Thank you so much for joining us today once again.
Thanks, guys.
And we hope to see you in the next episode.
In 2 weeks.